Hello, everyone. Welcome to Pbolic Notes. My name is Michael Kirkchin, and today is Sunday, July the 3rd, 2022. Have we already seen Bitcoin's bottom for this cycle around? That's the topic of the video today. And I'd like to share this video with you. And it's based on what I saw last week on Real Vision with a great technical analyst, Red Capital. And Red Capital was looking at the 20-month moving average, how in the past it had shown the Bitcoin's bottoms. And it looks like right now we're kind of reliving the same pattern. And I'd like to share that with you and look at my analysis. Before I get started, of course, full disclaimer, I'm an investor in this space and I'm not a financial advisor. So whatever I'm sharing with you here is based on my personal investment. Please do your own research. This is not financial advice. Let's get started by me sharing with you my computer screen and looking at what is going on. So if we look at the 20-month moving average, so this is on TradingView, and the purple bar you see here, the purple line here you see is Bitcoin's 20-month moving average. Obviously, this is a pretty long pattern because each bar you see here is the open and close of an entire month. So meaning that this is a monthly chart, so that's why it's not going to be as let's say detailed as a daily chart. So if you look at the monthly chart, the last time what Red Capital had explained how was basically if we go back to 2013, 2014, we see that Bitcoin had already gone down significantly in its cycle by approximately 65%. And once it got to this level of the 20-month moving average, it actually went down an additional 47%, as we see over here, and it stayed in this position really below the 20-month moving average for a period of over a year. It was basically something in the range of approximately 400 days or 396 days to be exact. And if you look at what it had done was this actually had successfully caught the bottom for Bitcoin for that cycle, because after that, once it was able to cross this on the up move, this 20-month moving average, then it was able to have this nice parabolic rally. Now, in the meantime, what I did was I wanted to see what was going on with the U.S. treasuries during the same period, which was basically between this range of in a period of October 2014 until until November 2015. So if you look at what's going on with the U.S. treasuries during the same period, from October 2014 until November 2015, we see that the U.S. treasuries were really, let's zoom in here. Okay, from October 2014 until November 2015, it looks like the U.S. treasuries were really on a downtrend, right? So basically what we see here is that around the period of October 2014, the U.S. treasuries, the 10-year treasuries, were something in the range of approximately around like 2.2, 2.1%. And then as we fast forward to November 2015, we see that it actually gone down to something in the range of around 1.92%. So it was a slight move downwards, nothing really exotic or exciting. But if you look at that same time, what was the US Fed doing with the Federal Reserve? The Fed funds rate at the same period from October 2014 until November 2015, it was really flat. Not just flat, but flat at a very low number. Basically, October 2014, it was something in the range of approximately 1.21%. And then if we fast forward to November 2015, it really was still very low. Again, it was like at the range of, again, actually, let me take that back. The Fed fund rate was actually almost at 0% during this time period. So meaning that interest rates were not fighting against Bitcoin. So at the same time period that Bitcoin was below its 20-month moving average, the interest rates were really in favor of Bitcoin. On top of it, I'd like to show you what was going on with the US 2-year treasuries. The US 2-year treasuries at the same time period, going from October 2014 until November 2015, were not doing anything. They were kind of just staying around here at this period of, it was less than 1%. So really, the 2-year bonds were flat. The Fed fund rate was at close to zero. The 10-year treasuries were actually going downwards. So really everything was in the favor of risk on assets. And if I look at what was going on with the general stock market, the S&P 500 in the same time period from October 2014 until November 2015 was really in the range of it was right here, but basically we see that basically in October the S&P was around something in the range of approximately 2,000 points, and then as we fast forward to November 2015, it was around 2,100 points. So it was really kind of flat. It wasn't really moving much. And I like to also look at the Nasdaq as well, just because Nasdaq and Bitcoin have this very strong coefficient of correlation. Even though at the time it may have been different, but let's just look at what Nasdaq was doing from this time period of October 2014 until November 2015, and we see that basically again the Nasdaq was kind of similar to the S&P. And October 2014, it was something in the range of approximately right over here around 4,600 points, and then as we fast forward to November 2015, it was in the range of 4,900 points. So it had gone up slightly, meaning that the whole time that Bitcoin was having this this movement of going down really extensively. I mean, Bitcoin's price had gone from this period of October 2014 until right over here around April 2015. He had gone down around 44%. Eventually, he was able to cross back this 20-month moving average. But in the same time period, the S&P was kind of stable. The Nasdaq was kind of stable, and the U.S. Treasuries and the Federal Reserve were actually very in favor of Bitcoin because it was really an environment of low interest rates and nothing really happening with the Fed funds rate. So that was basically what that period was about. And I also looked at what was going on. So I went into the block, which is a great website for on-chain analysis. If you looked at what was happening to the number of hodlers in the same time period, the actual number of hodlers in the same time period had actually gone up by 44%, meaning that even though Bitcoin was having this this move downwards, people were still hodling their Bitcoin tokens. And now let's fast forward to what's going on at the next time this happened. Next time this happened was right over here. It was in November 2018 until again something in the range of until May 2019. And as we see here, again, this 20-month moving average was able to really catch properly the bottom of the period. So we saw that basically, again, similar to the previous period, there was this big drop down. And then there was a couple of bars, a couple of months that Bitcoin stayed below this 20-month moving average until it went up back up and again had this nice parabolic run going basically from 7,200 US dollars all the way up to our prior high that we saw last year, which was above 60,000 US dollars. But again, the time that Bitcoin spent below this 20-month moving average, very similar to the previous one, was basically, so right over here in January 2018 until this period of November 2018, what happened was Bitcoin had, in these 300 days, Bitcoin actually lost over 50% of its value. And then afterwards, from this point on, what it did was basically from this period of November 1st, 2018 until this bottom of something in the range of, I guess, within a couple of months, within 3-4 months, it was basically able to hit this bottom of around by again an additional 45% drop from the from this prior drop, an additional 45% drop, and then afterwards eventually it went back up above this 20-month moving average, and it went back up on this parabolic run upwards. So again, if you look at what happened was this time period, Bitcoin really stayed below this 20-month moving average for a period of 1, 2, 3, 4, 5, 6, 7 months, right? It was 7 months, and then it went back up on this parabolic run upwards. And again, if you look at what's going on with the treasuries and the Fed funds rate and so forth, if you look at the 10-year treasuries between November 2018 until really May 2019, we see that they were actually in favor of Bitcoin, because they were actually, the 10-year treasuries were actually dropping significantly, because they were basically in November 2018, they were almost at 3%. And then by the time May got here, 2019, they were basically at the range of approximately right over here at almost 2%. So that was actually a 30% drop of the US Treasuries in this same time period. What was the Fed funds rate doing? Well, basically, if I look at from November 1st, 2018, right over here, until May of 2019, we see that it had actually plateaued. It was actually on its way slowly to come down. And if you look at what was happening with the U.S. government bonds, the 2-year bonds, we see that basically from May 2018, I'm sorry, from November 2018 until May 2019, we see again the U.S. government bonds also were really on a downtrend. So really, the interest rates were in favor of Bitcoin during this time period. So if I look at how was this reflecting with the stock market? Well, as you recall, 2018 we had that crash in the stock market. So this happened to be at the same time period. If I look at November 2018, where we were something at this high of approximately 2,800 points for the S&P. At the low, it went down to 2,400 points approximately. So this was really a drop for the S&P of something in the range of percentage-wise. It was and actually it was an important drop. It was like a 20% drop. So this really would have put the S&P in bear market territory. And afterwards, if you look at what it did, was eventually it went back up to by May 2019, it had actually recovered, and it got back to initially to the initial point where it was before this downturn had happened. And if you look at what was going on with the Nasdaq in the same time period, from November 2018, very similar to the S&P. November 2018, the Nasdaq was approximately 7,800 points. It went down to something in the range of 6,200 points, and then by May, it had recovered back to its initial points. And at the same time period, with the hodlers, we see that there was an increase of 8% of the number of hodlers for the Bitcoin token. So meaning that even though we were having this drop, there was more and more holders holding their Bitcoin. Now, this time around, it's a little different. So it's not exactly the exact same thing. So again, this is the 20-month moving average. So you see, we know that basically Bitcoin had this major drop, obviously, from last year's. Last year we had a double top really. We had two rallies last year. This was basically, last year was not a typical year for Bitcoin, especially with the way that the Wall Street was also entering. And also there had this the ETFs coming as well. So obviously it wasn't really a typical year last year for Bitcoin. And I had seen a great speaker mention this as well last year, actually a few weeks back, mentioning this, that it was I can't pinpoint their name. It was an economist. And he was saying basically on Real Vision how the ETFs, this Bitcoin ETF that entered last year, really made Bitcoin have a rally that was higher than it was supposed to have been. So meaning that this run that Bitcoin had going up to $69,000 was really pushed by this ETF as well. That was really adding a lot of excitement and a lot of buying of the Bitcoin token. So meaning that the run that Bitcoin had all the way up to $69,000 should have been really at a much lower plateau if we didn't have this last year. So obviously I can't really comment on that. It was just a very interesting perspective. If I look at again what's going on with Bitcoin's price this time around. So over here we see again we basically had this drop from Bitcoin from its all-time highs of approximately 60. Well, I mean, real number was around something in the range of $69,000. But for the sake of being accurate with the charts, it looks like the drop that we had from this all-time high until the 20-month moving average was something in a range of around 27%. And afterwards, once Bitcoin got below its 20-month moving average, right over here, it looks like in April of this year, since then, we've again dropped like the previous times by an extensive 53%. So now what that means is that now it's only been around 3 months. That being said, this 53% drop in those 3 months has also coincided with other major things that we're seeing in the stock market and in the interest rate markets, which are different this time around than the previous 2 times arounds. Now, again, just to look at what's going on with the hodlers actually, again, in the same time period from April 1st to July 2nd, we've seen more hodlers come into space as well, which is a great sign for Bitcoin. And if you look at what's going on with the stock market and the interest rates, the US treasuries are this time around fighting against Bitcoin, because now we see if we go from April of this year, the 10-year treasuries were at 2% approximately. Today, they are at close to 3%. And as we saw at the high, it was actually got to way above 3%. And this is the US 10-year treasuries. The Fed funds rate today is at 1.75%. So if you look at where it was in April, the Fed funds rate was something in the range of, I'll look at the exact data, which would be better. If you look at what the exact numbers were, if you look at, let's say, the 1-year data. So again, the Fed funds rate as of April 1st, it was something in the range of right over here at 0.50 percentage points. And then on May 1st, they went up to 1%. And then, as we recall, what happened was in the June meeting, they went up to 1.75%. So meaning that the Fed funds rate actually is fighting against Bitcoin. It's actually going higher, which kind of explains as well what's going on with the interest rates. And also look at what's going on with the 2-year treasuries. Same thing, US 2-year bonds. Again, on April 1st, they were in the range of around 1.5%. Today, they're close to 3%. So again, interest rates are totally against Bitcoin. And as we know, of course, with the Nasdaq and the S&P, since April, they've lost extensive ground. I mean, if you look at what Nasdaq has lost since April 1st, I mean, Nasdaq's been lost approximately something in the range of 18%. And if you look at, I'm sorry, that's the S&P, has lost around something in the range of around 18%. And if you look at what the Nasdaq has done at the same time period of April 1st till today, so April 1st till today, the Nasdaq has also lost quite a bit. It's gone down from 14,000 points all the way down to something in the range of around 11,000 points. So that's a drop of over 20%. So meaning that, to summarize in conclusion, what I like to say is that this time around is different. So again, if I look at what's going on with the RSIs, I mean, we see that it does make sense that that we may be the relative strength is telling us that Bitcoin is really oversold on the monthly chart. It looks like it's showing us these lows typically that Bitcoin doesn't go much lower than that. So that could be a very positive sign to pinpoint that this may be our bottom. But then again, if we look at the fact that on a macro, we're not living the exact same kind of situation with what's going on the macro with interest rates specifically, as well as the Nasdaq and S&P. It means that this time around, this may be the bottom, but then again, it may not be the bottom. So obviously, it's inconclusive. Because of the fact that things are different this time than they were in the past. So it means that the way I would see it is that this may be the bottom or this may not be the bottom. So that's why I take it all with a grain of salt, be very cautious. If investing in the space right now, be careful. As long as your horizon is a long term, that's okay, that's great. But if you're really looking to be picking Bitcoin at the bottom, this may not be it. Just because of the fact that the interest rates and so forth aren't really in Bitcoin's favor. So thank you so much for watching, everyone, and I will redo this pattern, this chart in the coming weeks if there's been any change to Bitcoin's price. Thanks for watching, all. Bye-bye.